All right, team, we are back with After Hours today. We are happy to be with you guys today. Matt and I are excited to discuss Hedera today on this show with you. This is the second to last show of the year, and so we wanted to spend the whole time discussing Hedera and all the use cases on Hedera. So Hedera on their website listed out how Hedera has been used in 2025. And this is kind of a good summary to know going into 2026. This is Hedera is a top 25 crypto by market cap. It is one of the most popular cryptos that you can find on the internet. When you search up cryptocurrency, HBAR will pop up. And we are investors into HBAR, and so we want to spend significant time today going through all the ways, doesn't matter how great or how minute the ways that Hedera is being used, whether it's for data management or carbon emissions, AI, some of the bigger ones being finance. And so we're going to talk about that all today. I mean, Matt, we've covered this whole year some of the big monumental points for the Hedera network this year, whether it's Equity Labs, whether it's Red Swan, whether it's Hedera being used on NVIDIA Blackwell architecture with Intel. We've covered it all this year, team. And so today we're going to bring it all together. If you weren't with us all year, we're going to bring it all into one show here for you guys. It's going to be pretty exciting. And towards the end, we'll discuss price, because recently, starting November 22nd, I turned my DCA back on, and I'm very excited to share that with you guys and talk about it in full with you guys here today. But before we get into all of this great Hedera news, I think it's important we talk about where we're coming from. We're coming from Crypto Charge. Matt, tell them all about it.
Absolutely. I'm very excited to get into this Hedera, wrap up this on today's show, because it is one of the topics and coins that we talk about quite frequently, both on the website as well as here on YouTube. And we try to keep our research on the concentrated set of things on high quality assets, and HBAR is one of those. So at cryptocharge.com, we cover the charts Monday through Friday on a live stream. If you guys don't catch it live, it is for your viewing pleasure at your own speed on the website once the show is completed. We have a written summary of everything we talked about during the day, giving you guys those actionable insights. We have our coin library with entries, exits, an entire analysis of what we're actually looking at with these main assets that we cover, including HBAR. HBAR is one of those on our website. You got Discord access. You guys have learning center resources like our TradingView 101, our consistent investor strategy. All of that, guys, comes at $49 a month, so 50% off any membership, so $49 a month, and a 30-day free trial with code YouTube. If you don't use code YouTube, you will, one, not get the free trial, and you will also pay $99 a month. So at least take the 30 days, come check it out. I know if you guys find value in the show we're talking about today, if these are things that you want to see covered in your life on a regular basis to help you stay updated and not have to do a lot heavier research yourself, our platform is a great place to start.
If you are convinced that businesses and institutions are going to use distributed ledger technology, that are going to use blockchains, or in this case, a hash graph, Hedera has to be one that is in your portfolio. I mentioned earlier that it is a top 25 crypto, and that isn't to say that that in itself makes it the greatest, but it is a network that is highly scrutinized, highly looked at, is going to be dissected by many out there. And we've done that this year. And I've come to the realization that with its consensus, it's very specific consensus, because it's really not a blockchain. It's a hash graph. It's got a DAG structure. It has these records transactions through interconnected events, not like a sequential blockchain like Bitcoin is. And so it is different in that way. But with the partnership it's bringing into this ecosystem, it is very vast, right? And I want to say this from the outset, because sometimes I know after watching the show, I just feel like we're stacking up all the evidence here for a Hedera, or we're stacking up all the evidences for the XRPL. What I want to say here is, yes, a lot of tokenization, data management, carbon emission, anything you can really think of, AI tools are being built on Ethereum, Solana, Polygon. That's happening over there, right? Here we're focusing on a slightly smaller crypto by market cap, but still one that is highly recognized. But it has a very specific consensus. It's solving the Byzantine generals problem in a very different way. It's a asynchronous Byzantine fault tolerance, all right? I'm pretty sure you've heard of BFT models. XRPL has the RPCA, the Ripple Protocol Consensus Algorithm, that uses Byzantine fault tolerance. Hedera does too, but it's asynchronous. So it's very differently. So it has this gossiping about gossip protocol. And so it's solving the problem that Bitcoin and Ethereum and all these other blockchains solve, but with scalability. All right. If we're talking about decentralized applications for high throughput, instant finality, Bitcoin can't do that. So where do we end up? We end up with Hedera, and that this network, this hash graph is doing this on a very high level, and it has attracted a lot of institutions within the traditional finance world to start using Hedera. And so, through 2025, we've realized it's like, okay, once we're coming out of the Trump election win, the language is very adamant about Bitcoin adoption, the acceptance of altcoins, and then we saw that follow through with the executive orders in March, and then we had the Genius Act. And so now everyone's on board with cryptocurrencies, with stable coins. And now institutions have what they feel is like the to go ahead and start digital asset treasuries, ETFs, purchasing digital assets, new ETF creations in 2025. Now we're at the tail end of this year here, and we get to look back and see, oh, wow, we had a lot of building this year on the Hedera hash graph, on this network, in the direction, a lot of what I like to see, which is finance, but also others too, that we're about to get into here in a second. And so some of the ones we could talk about right now are finance, that's, tokenization of real world assets, that's cross-border payments. We also have carbon emissions. You also have data management, AI. You have all these ones. Some of the other ones that people don't like to talk about as much about Hedera would be CBDCs running on Hedera, or digital identities. Some people don't like this. A lot of people look at these tools, these endeavors that are happening on public blockchains, and they get a little bit scared. You can, if you listen to some of the people in the Bitcoin world, they don't like, CBDCs at all. And I think us at Crypto Charge, we've come to realize that, these things are kind of inevitable. Yes, I would feel a lot more confident if I had trust in a government to run CBDCs on a public network. And, that's fine. If I trust my government, trust is at an all-time low though. I was reading something from Pew Research Map, and they were talking about trust being at an all-time low here in America. And they're even breaking it down by racial groups: whites, blacks, Asians, Hispanics, and nobody trusts the government. Nobody even trusts institutions. We're coming out of the COVID era. We're coming out of 2008 financial crisis. Nobody trusts the people that oversee them now. And so now in 2025, we have to look at other systems that are verifiable, right? And so this is where we get into Hedera. Anything you want to say about that before we get into some of the big partnerships, some of the big use cases on Hedera this year?
Nothing brings Americans together like disdain for the government. That's for sure. You brought up a lot of good points there. There's a lot of high quality use cases that are occurring on Hedera, which we're going to get into here. A lot of components that maybe people don't like CBDCs. But at the end of the day, guys, the fact that we've had the Federal Reserve, essentially being a non-government entity, but still in control of policy rates and printing of money, which previously, prior to JFK, belonged to the U.S. government, that authority, which now it does not belong. So we've already kind of been in this, pseudo money environment for quite some time now. We haven't had it backed by anything but the full faith and credit. So at the end of the day, we already kind of have some sort of CBDC structure. Whether that gets laid on digital rails or not, that's more just a matter of time, not a if. It's more of a when thing. I obviously am very impressed, like you said, with the technology that HBAR uses. They use the directed acyclic graphs, which are, like you said, nodes essentially gossip to each other. A couple other projects that, just so you guys kind of have a little bit of an ideology, Avalanche also utilizes DAGs. Caspa, I know what you guys are interested in, also uses a hybrid DAG model, although they are using a proof of work model as well for linear blocks. And then Phantom also uses directed acyclic graphs in its modeling. So there are other projects out there that are utilizing it, but Hedera truly uses it to the highest use case possible. They have the most incredible throughput, theoretical, both as well as practical. 3,300 TPS practical right now, 10,000 hypothetical TPS. Of course, that always is scaled based on what's being pushed through the network. But I think that even after all these years that DAGs have been available, I think they're probably one of the most underutilized consensus mechanisms out there, because people are obsessed with linear block order, which doesn't necessarily provide a higher level of security or verifiability. People just haven't dug into into this consensus mechanism as much as they have, for example, proof of work or proof of stake. So I think HBAR and the Hedera Council and the Hedera Hashgraph model is kind of setting a precedent for what's to come. And all these things we're about to talk about are accelerated because of the consensus mechanism. And that's a big component I think people overlook, is that, that is really the most important part of any protocol, is how efficient can we be with any of these tokenizing events that we're going to be talking about.
In 2025, we saw real world applications being deployed on Hedera, real partnerships with big institutions, and I want to get into all of them. I cut out a couple of them because I felt like they were going to take us off track into another world, but let's talk about the finance, the carbon emissions, the AI, the data management, everything that Hedera is solving for businesses and institutions. And let's start with AUDD, first Australian dollar stablecoin natively issued on Hedera using HSS, or Hedera Stablecoin Studio, enabling instant settlement, low fees, regulatory compliance, and interoperability for digital finance in Asia Pacific. You also had USDC being deployed on Hedera, a big reputable stablecoin, one of the top two. Drop, Hedera-powered micropayments platform for fractional real-time payments at low cost, enabling pay-per-use models with cheaper processing fees for merchants. Big one here, Red Swan. I loved this one early this year. I love it now. Tokenization of commercial real estate assets, now over 5 billion tokenized. When we talked about it last time, it was just the announcement, but now we have 5 billion in tokenized commercial real estate on Hedera, enabling fractional ownership and global accessibility. Diamond Standard, tokenization of standardized diamond collections using Hedera token service for fractional ownership, instant trading, and transparent pricing. Swarm, compliant tokenization and trading of real-world assets, stocks, bonds, commodities, bridging TradFi and DeFi on a platform that is working and building on Hedera. ArchAx, regulated platform for issuing and trading tokenized securities, money market funds, UK Gilt, with institutional partnerships like Lloyd's and Aberdeen for near real-time collateral and margining FX derivatives, using Hedera to tokenize assets. Amazing. Zonex, chain-agnostic tokenization platform for compliant real-world asset tokenization with fractional ownership and liquidity. That is on Hedera. Let's talk about a little bit of the cross-border payments, which is something we really haven't talked about on Hedera. Stablecoin remittance pilots by Shinhan Bank and Standard Bank and SCB TechX using Hedera's token service for real-time settlement and FX integration. So cross-border payment stablecoins running on Hedera being pilot tested by banks. And then you also had BitGo partnership with Hedera, helping institutions manage their digital assets. That is all that is taking place on the finance front. Let's talk about carbon emissions and decarbonization. Blockchain for energy, B4E carbon, end-to-end digital MRV system for emission data with immutable recording, AI forecasting. AI forecasting is crazy. And tokenized claims using Hedera Guardian. Vera partnership, digital first carbon project management with real-time methodologies, streamlined workflows, and transparent data using Hedera's DMRV tools. And then we covered this earlier this year, Hyundai Motor Group and Kia, immutable carbon emissions tracking systems for transparency. And then Dovu OS, modular infrastructure for climate workflows with traceable, digitally signed blueprints using Hedera's Guardian. And then we get into the data management. Ocoer, I tried looking this up. There was nowhere I could find the pronunciation of this institution, I mean business. Tamper-proof healthcare data logs, automated workflows, and transparent governance for secure collaboration. QuitPick, DLT verified transparency and last mile logistics and delivery for traceability and accessibility. Mondelez, immutable tracking of consumer packaged goods for supply chain and digital payments. Earth ID, self-sovereign digital decentralized identity platform for verifiable credentials and secure audit trails. DIFC Courts, blockchain-powered digital vaults, wills, notarization for secure document and asset management. Neuron, decentralized identity, micropayments, verifiable data exchange for scalable Internet of Things and machine-to-machine commerce. And the Chainlink integration, secure interoperability with tamper-proof data feeds, cross-chain transfers, and proof of reserves that is allowing Hedera to reach into other ecosystems. Let's talk about two more themes here that we have going on in Hedera, one being AI, verifiable governance for AI agents. So that's Hedera Foundation and Equity Lab, immutable logging of AI actions and decisions on Hedera Consensus Service for transparency and compliance in the public sector. Verifiable compute on NVIDIA Blackwell architecture with NVIDIA, or with Intel, I mean. Hardware-rooted cryptographic attestations for AI operations anchored on Hedera for audibility, governance, and regulatory compliance. We talked about the hardware earlier this use. That is using verifiable compute on the NVIDIA Blackwell architecture. And then some of the other notable applications I saw was Karate Combat. You earn karate token. They're kind of trying to transform the entertainment sphere, entertainment and mixed martial arts, allowing viewers to participate and earn tokens. And then you had Tune FM, micropayments per transactions or micropayments per second streamed, and NFT minting for artists. So you earn a jam token for every second someone is listening to your music. And Kabila, Web3 tools for creators, including NFTs, all built on Hedera. So this is kind of where we're at in 2025, right? We have some of these other use cases, but we have some major ones when we're talking about data management and using finance tools built on Hedera. And so this is really, what are the big things we talk about a lot, team? We talk about cross-border payments. We talk about the tokenization of real-world assets. And then we also, talk about DATs and products for investors, whether that's ETFs. You have HBAR ETFs now, spot HBAR ETFs at the end here in 2025. So a lot of options for people that are looking to invest into the digital asset sphere. Hedera is going to pop up on their radar. Matt, what are some of the notable things that you see going into 2026? Because this is a good foundation. What do you see out of these being enhanced in 2025, growing as a tool on Hedera?
Oof. Well, first of all, Gavin just went full Rain Man on you guys, so I hope you guys appreciate the value that was provided here from just like the overall macro overview, because there is a ton to talk about, and these are really a lot of the key use cases. I'm just going to highlight a couple things that I think that we did just mention here in this little spiel about kind of the overview of a lot of the things that have been growing on the network this year. One of the smaller cases, for example, we talked about Archex, Lloyd's of London, and Aberdeen. Specifically, let's lean into the Lloyd's of London concept there just for a little bit, so you guys can kind of envision with me a little bit what that means on a grander scale. If you guys are not familiar with Lloyd's of London, they are one of the most interesting policy writers out there as far as what they will insure. Meaning that obviously there's lots of people who will give you home insurance and they'll insure certain things in your house, whether it's art or metals or things like that. Lloyd's of London is the type of entity that will take it a step further, and of course you pay a big premium for it, but they'll insure things like your dog or very odd pieces of very niche collectibles that necessarily would never be lended against otherwise. So when you have Lloyd's of London participating now in tokenization of a lot of these policies, what that allows you to do is then essentially be able to maybe take that NFT that would into a DeFi pool and collateralize it, allowing you to potentially have liquidity up against your policy that you wouldn't be able to draw against in other instances. So what it really does is it really opens up a very wide array of things that would never be able to be tokenized on the network, or selling or essentially borrowing against your insurance policy. Is a really interesting concept that I think that not a lot of people have thought about there. We also talked a little bit about decentralized identities here, and that's something that everyone's going to feel a certain way about at the end of the day. If you want to do anything here in America, you need an ID, you need a social security number. You need to have those things, and most of the time we go to apply for a loan or anything else, you need to of course provide that information. What DIDs are allowing us to do is of course putting that on chain, putting your identity on chain. That is just inevitable. That is going to happen, and you're going to hate it at first, but at the end of the day, it's going to make your life a lot easier. What it also allows us to do is have more sovereignty with that decentralized identity. So there is a benefit to it. And that's going to be for, let's say there's a platform and all they need to know is that you are over the age of 21 years old. You don't necessarily have to say, hey, this is my name, this is my address. You don't have to share all that information. You can just submit your certificate or your DID, sharing only certain read-only details that the actual application needs. So it actually potentially gives you a little bit more, privacy in relations to how much of your identity that you have to share, whether it's, a KYC application or not. Of course, commercialized real estate is a huge component that's going to continue to grow. That's one of the main topics that I think is going to become like a huge center in crypto and DLT over these coming years. So that's one of the main verticals within this, I think, is going to grow exponentially. And then also the computing side of things, so the hardware side of things, that is going to potentially also help scale our need for hardware. And that's going to be a bridge that we're already uncomfortably crossing right now, is the growth of the AI sector and then the actual amount of hardware we're able to produce right now. So when you do have, protocols or networks that have the ability to, make data a little bit more compressed, are able to audit data and potentially put less work on the machines themselves, you can potentially get more value out of that actual hardware by utilizing, those AI audits, internal audits, things of that nature. So I think that all of these verticals that we discussed are things that we're going to see growth into these, next years. But DIDs, hardware optimization, and then of course, collateralization of different types of insurance policies, as well as, money market accounts, tokenized, treasuries, like we've seen with OUSG and Ondo. Those are the three things I think that out of everything we've talked about here, I think we're going to see a lot of consistent growth and news out of this next year and the years after.
Mm-hmm. When most people talk about these networks, they fail to get into all the nitty gritty. And I wanted to know everything. I want to know everything that's going on Hedera, because guess what? I'm an HBAR token holder. So if I'm an HBAR token holder, that's directed to the Hedera hash graph. That is directed to the Hedera network and Hedera ecosystem. So I better be in the know of everything. And so this show is going to provide that for you guys. I know a lot of these things, like we mentioned, is happening on other networks. This is why we're not a buyer of one token. We don't just buy Hedera. We don't just buy XRP. We buy multiple cryptos, multiple tokens attached to blockchains that are doing different things. And so as Hedera here, what can we kind of gather from Hedera? Finance world, it's really attacking that. That's what I see is the biggest one. Also, I'm kind of surprised by its attention in the carbon sphere, the decarbonization sphere. Really rails for stable coins and pilot tested for CBDCs. A lot of people don't like that, but that is how Hedera is being used in 2025 and going into 2026. A lot of upside potential for Hedera here. And I kind of did just want to talk about with you guys kind of the investment aspect of it. All right. So Hedera is great. Awesome, guys. What about buying though? So starting in late November, I actually turned my DCA back on. We were interacting with bear market highs and those resistance zones of the bear market. And so now we cracked below them and we dropped significantly below the 23.6% Fibonacci. And from those December highs of HBAR from last year, we're down 71%. Why isn't it a good time to buy, And so we were touching 11, 10 cents. And so why would now not be a good time to buy HBAR? And the argument that has been posed by my friends, where I was posing them these arguments, years ago, I was like, don't raise your cost basis, don't raise your cost basis. And now they're posing that to me with HBAR, which I think is hilarious and awesome. For me, for HBAR though, I'm recognizing there is a long-term future here with HBAR, right? We're having this ecosystem being adopted by a lot of institutions in the UK, in Australia. And so Hedera looks like it's here to stay, stable coins being minted on Hedera, pilot testing for bigger financial use cases like CBDCs, like decentralized identities on Hedera. And so Hedera, I believe, if you're an investor in a crypto, if you look at all this information, you're like, wow, this is like some of the premier things that blockchain has to offer right now. Hedera is one of them. It's definitely a top, 30, 40 crypto, if we're just talking by market cap, top 23, 4 right now. And so there's a lot of options out there when it comes to blockchains, and some businesses and institutions need cheaper options. That's where you get like a Hedera. They want to depart from their more centralized options for a more cheaper and efficient option. All right. It's really about the cost savings. And with entering into Hedera, you also get a lot more options. As we continue to progress with legislation. The writing is kind of on the wall with some of these people that want to, or I should say, businesses and institutions that want to partake in these networks, and now they acquire the tokens, and then the access is amazing, and the yield you can earn on those cryptos is also amazing. And so that's where we get into the decentralized asset treasury realm that I think is going to explode even more so than we've seen in 2025, even more so in 2026. We're going to start seeing, maturity. We've seen Bitcoin mature so much. That's what's next for a lot of these top tier cryptos. They start not as going parabolic anymore, you could say, or they stop, the big price swings, you start to see them be minimized. And that's going to happen over a lot of years, but we're already seeing that happen now in 2025 going into 2026. So Hedera is exciting. And from my vantage point, I want Hedera, I want HBAR to be one of my top 2 holdings in my portfolio, along with my XRP. And then I have like my Zcash position. I have an API 3 position. I have a Casper position. If we're looking at all the use cases on Hedera after today, I want in 2026 for Hedera to be one of my top holdings. And the only way to do that is to have that auto DCA on. And I know it's not at the pristine lows, but the rewards are tremendous. And Matt, I want to talk about those rewards on the chart with you.
Yeah, absolutely. We'll take a look at the charts together and kind of talk about, ROI and structure and all that good stuff. Gavin outlined a lot of really important components at the top of the show today. And, if you guys felt like it got a little bit lost, go back and slow it down and listen to it, because there is a lot of value that's important in there. The reason also that Gavin is very passionate about this is because he has a very focused portfolio. It's a 5 crypto portfolio. So he's really able to keep up with this stuff. And these are the kinds of things that I want you guys to know. Besides the ROI, the charts are obviously my bread and butter and things that I love. But the reason that Gavin doesn't even have to think about, hey, is HBAR a good opportunity, is because he stays on top of the fundamentals and he knows, where that progress is coming from. So just like anything in your portfolio, anything you put in your portfolio, you should assume, okay, if World War III breaks out, if there's macro factors that are unfavorable, do I still feel good about the long-term trajectory fundamentally about the project? If the answer is no, you're unsure, or you don't even know let's see, even the top 3 things that's happened this year for some of the things in your portfolio, you probably own too much. And that's an okay issue to have, but you probably need to trim it down and be a little bit more focused. So let's take a look at the chart here. Let's take a look at the opportunity for HBAR. It's obviously something we talk about on the show regularly. It's also a part of my portfolio. Mine's, a little bit wider number of asset wise, but I still keep it, relatively slim, and I'm very particular about when I do add. And even when we saw this big break on HBAR in here, a lot of our team, and even people who've been seasoned a while, they got the FOMO. They started, it's still a good deal if I can get a quick 2-3x out of it. But, you have to watch for that actual deal to come in. For HBAR here, what we were essentially watching for as far as like that, a minimum value. I would say that like we have like minimum retracements or like minimum rebalancing that needs to occur. And for HBAR, the minimum was like 12 or 13 cents. That was like the absolute minimum. We were up there towards 30, 35 cents. I was like, hey, if you're going to buy, please, this is the minimum area where it needs to be resolved. And that's very clear as to why that area is. So you had a little pullback here, or a little push here in 21, broke over it. You had this big top in here in January, and then, through June of 2024, came back down to the lows. So ended up just kind of, re-solidifying that floor in here. Now, when you broke over this back in November of last year, that was the biggest violation. And a lot of people say, oh, you're just jealous because you didn't get the price. That's not true. I'm actually still technically in profit on my HBAR right now. I just know what the charts should be doing, and I'm not going to bet against those odds. It's very foolish of me. So that was the minimum. But we also talked many, many times on our platform about this area right around the 8.2 to like the 9.5, 10 cent region. So a previous top is minimum. And then when you look and you see the cumulative range that was built in here, you can see there's 2 examples here, both in February of 23 and then again here in December of 2023, 2 very firm rejections off of that level. And then moreover, you can see that the scan wick here, because this is the aggregated chart from TradingView, comes down to roughly, let's call it 9 cents, which aligns pretty closely with that area of interest. So we are kind of in a little bit of a limbo here between those 2 zones. If you want to set a limit-based order, I'd be looking at 8.2 to 9.5. You're struggling with the 200-week here. If you could maybe get back over 12 to 13, then you're probably back in a little bit more of a bullish spot. HBAR is probably one of the more structurally strong opportunities compared to a lot of the other things that we're looking at in the market right now. Some smaller cap stuff has really gotten their teeth kicked in, but you look at XRP, HBAR, ETH, Solana, a couple others, Zcash, they're still showing signs of strength, but it's really a rare set of alts that have been showing this behavior because of the relationship we've seen in dominance. So let's talk about ROI, right? Because we don't have any imbalances to the upside that really got left behind. Let's bring in the Fibonacci here from cycle high, cycle low. We can see that we came in for pretty much a 702, 618 situation here in January of this year. If we were to, for example, let's say get a nice little 9.2 cent entry, let's just say that would be your entry if you set a limit-based order, to the 1.618 is now upwards of like an 860, maybe almost a 900% gain. If we go from same area of interest to maybe the 2.618, maybe a 14x, and then a full extension puts you close to a 23x. So it's difficult a lot of times too when Gavin and I will bring, let's say earlier this year, we'd bring HBAR on the show, we talk about all these amazing things and we'd be like, but wait, because it's not the absolute best value. Because if you were to look at when we were talking about HBAR at some of these, especially news events here at these prices, right? You hear 23 cents. We were talking about maybe a 280% move, right? That's vastly smaller reward, and that's a much bigger or much lesser risk to reward ratio. So now that we've encountered these areas both structurally and ROI wise, paired with the research that we've given you guys fundamentally, it makes it a little bit of an easier decision. Now, of course, not financial advice. You guys, need to make sure you're doing your research. But these are the things that I want you guys to consider. If you are serious about becoming either a cycle-based trader or a long-term investor, sticking with the fundamentals, having that hit list, and being patient for the technical opportunity is, although it seems like the hardest thing to do, actually makes your job a lot easier. So sticking with the stuff that you actually want to be invested in, only adding on lucrative technical opportunities, and then just accepting that the market is not always going to give you the timing situation that you want. Just try to manage that risk as best as possible. But underneath, let's say even like 16 cents right now, 14, 16 cents is a good deal. Limits down in the 8 and 9s would probably get you, a pretty nice bag and a good ROI to even TP1. So we're back in the value zone, guys. So do with that what you will.
Mm-hmm. I love that. Very well said there, Matt. Team, we didn't really get to get into like the DEX. We didn't talk about saucer swap. We didn't get to talk about the tooling that is on Hedera, allowing institutions to come build what they need for or out of a blockchain, what they need for, payments, data management, etc. And this is why, earlier this year, I kind of like made this distinction for you guys, because a lot of you, Matt, you remember this, where people were like pinning up cryptos together and they would say like HBAR and Casper. And that's very difficult to say because in one sense, if you're looking at the price potential, if we're taking into consideration market cap, if we're looking at, the risk to reward here, yes, Casper has depreciated a lot. You could say Casper was a better investment point this year than Hedera, than HBAR. Now though, earlier this year, we discussed like, well, listen, these are two separate cryptos. They're doing two different things here. They're kind of being focused in different ways by businesses and institutions. And we kind of need the businesses and institutions to bring in that institutional adoption to kind of bring in more retail adoption. I think David Schwartz argued this last week, and I thought it was kind of hilarious, where you start seeing more accepting institutions, Wall Street, ETFs. Now all of a sudden you get more money pouring into these digital assets. And so I think that's what's on tap for 2026. That's what I think is on tap for Hedera in 2026. I did want to get into some of the Bitcoin prediction. I know a lot of you probably on your head right now. What about altcoin season? What about Bitcoin price? And I've heard the best explanations for a altcoin season and a continued Bitcoin bull run going into late January of next year. Tom Lee pushed back his Bitcoin prediction. He was one of these ones, Matt, that had the very orthodox standpoint of, 18 months after a Bitcoin halving is typically when you see the Bitcoin top. And now that hasn't happened. So what do? You push back your predictions later. And so right now, the best thing that you can do is to continue to invest. All right. Even if worst case scenario, like, Fundstrat, where Tom Lee's at. Tom Lee is the big rep at Bitmine and Fundstrat, the guy that's pushing back his prediction. At Fundstrat, another rep was talking about the base case being 60 grand for Bitcoin. Even if that was the case, you're going to see a lot of collapse in altcoins. You want to be positioned, like Matt said, into altcoins that you can trust that will stand the test of time. HBAR is one of those that will stand the test of time with how much it has been adopted and the products that are being rolled out. ETS for HBAR. What are we doing here in 2025? It's only going to get bigger in 2026, and that is what makes me excited. Team, if you like this show today, make sure you leave a like. I want to do this for other cryptos. We have next week we have our final show of the year, the last after hours of the year. I want to do this on another crypto. So you guys drop in the comments, whether that's Casper, Zcash, XRP, Algorand, shoot, whatever you guys think we should cover next week, kind of like this show, drop it in the comment section down below. If you have any other questions, leave them down there as well. Matt, are you doing the Ask? No, we have Christmas this week. Shit.
Yeah, we're sorry guys, we got to do Christmas. I'm very involved with Christmas. I'm doing Christmas this year. Sorry, but no Ask Matty, guys. But next year we are going to have Michael Storer back on the show. We're going to try to lock him in for the first week of January. We'll definitely be doing a lot of our Ask Matty stuff next week. You guys have been showing out for our TikTok lives on Thursdays, which has been a ton of fun with you guys. Also, just kind of getting to know you guys and taking some unique questions from you. So we're going to keep bringing you guys that value. I really hope that you guys come check us out at Crypto Charge. Again, that 30-day free trial. All that's required is code YouTube. You get 30 full days to check it out. That includes Discord, everything I mentioned on the website. Let's get next year locked in, guys. Right? Like, you don't have to go this alone. You guys don't have to spend all your extra time doing this heavy research. Let us do a lot of it for you, so that if you want to work off of that, you guys have a nice base case. And again, at $49 a month, it's really just pennies on the dollar.
Mm-hmm. Merry Christmas, team. I know Matt and I weren't as festive this year. We didn't whip out the Santa hats. I just kind of wanted to be serious today a little bit. I kind of just like, hey, listen, like, let's cut the bullshit today. I want to talk about Hedera. Like, that's all I want to talk about. So Merry Christmas, team. Enjoy time with your family. We will see you guys next week for our last couple shows of the year. Bye.